Good morning to all of you, my dear students. We have assembled today to discuss a very important subject, that is Income Tax Act. As far as the subject income tax is concerned, no, this subject is supposed to be a very complex or complicated one, you see, and therefore we require the total attention of students inside the classroom or through Zoom meeting or MS meeting and so on. I mean, as far as the income tax provisions are concerned, you see, all these provisions were initially laid down under the Income Tax Act. 1961, you say, but subsequent to that, no, a recent new income tax act has already been legislated in the parliament, you see, and this new piece of legislation in the form of income tax act has already come into force. Under the new income tax act 2025, perhaps necessary efforts have been made to minimize the provisions of the Income Tax Act as far as possible. You see, some of the chapters have been provided in an abridged form. You see, and at the same time, there were so many different sections in the past. You see, now the total number of sections has been reduced also as far as possible. I mean, the basic purpose of this new exercise in the form of new Income Tax Act, you see, has been to simplify the provisions of income tax law so that all the stakeholders will be able to understand the implications of each and every section of that new Income Tax Act. Now, before we proceed to discuss the subject as such, first of all, I shall give a bit of introduction to the subject as such. I mean, we shall start with an explanation of the basic concepts such as previous year and assessment year. Yeah, you see, under the Income Tax Act 1961, you see, the basic concepts of previous year and assessment year were given too much of importance. You see, as per the meaning of a previous year, a previous year is nothing but a financial year starting on 1st of April and ending on 31st March the next year or the following year. Now, all incomes earned by an SSC during the relevant previous year will be taken into consideration for income tax liability purposes. You see, and the assessment of income tax liability will be done in the next financial year, which is also otherwise known as the assessment year. Let me just give a simple example to in this connection. You see, suppose 2024 and 25 has been taken the previous year, then naturally in relation to this previous year being 2024 and 25, the relevant assessment year would be taken as 2025-6. 2025 and 26. Now, during the assessment year being 2025 and 26, necessary assessment of the individual assesses taxable income will be computed. You see, by applying the relevant income tax rates. I mean, as far as the income tax rates are concerned, such income tax rates actually go on changing from one financial year to another, depending upon the proposals made in the Finance Act of the relevant year. I mean, by applying the relevant income tax rates, you see, to the total amount of income or to the total taxable income earned by the SSA during the relevant previous year being 2024 and 25. Now, the actual tax liability of the SSA will be computed during the next year or the following year, known as the assessment year, that is 2025 and 26. So this kind of distinction used to be made, you see, between what was known as the previous year and what was known as the assessment year, isn't it? Therefore, to put it in simple words, an assessment year is nothing but another financial year which comes immediately after the end of the relevant previous year. I mean, these concepts used to prevail. You see, earlier under the provisions of the Income Tax Act 1961. You see, but with the passing of the new Income Tax Act 2025, perhaps only a single year has been mentioned, that is tax year. I mean, that means tax year should be understood as the relevant previous year, the incomes of which must be taken into consideration for income tax liability determination purposes during the same year or during the same tax year. I mean, so the basic distinction between a previous year and an assessment year has been totally done away with, and now a single formal year has been given under the provisions of the new Income Tax Act, that is known as the tax year. So during the tax year, all relevant incomes earned by the SSC must be taken into consideration, and the total amount of tax liability payable by the SSC should also be computed during the same year, that is known as the tax year. So this was a little bit of introduction given to the subject of income tax, you see. Now there are so many different basic concepts or fundamental concepts which must be properly understood, you see, so that we can proceed to discuss different provisions of the Income Tax Act one after another, you see. As far as the total income or taxable income of the SSC is concerned, broadly speaking, there are five different heads of incomes, including income from salary, then income from house property, income from business or profession, capital gains, and income from other sources. All these five different heads of incomes should be taken into consideration, so that the total of all these so that the total amount of all these incomes earned by the SSC during the tax year will be known as his gross total income. After the gross total income of the SSC has been computed, the next important thing we should do is to make necessary deductions under Section 80C to 80U from the gross total income of the SSC. Now the balance amount that remains will be treated as the SSC's taxable income, or total income, or not in or net income earned during the relevant tax year, you see. And on the basis of such total income or taxable income earned by the SSC, the amount of tax liability is to be calculated or computed. Okay, so these are just a few points regarding introduction to the subject of income tax as such. Gradually we shall proceed to discuss other important topics also, like how the gross total income or total income or tax liability of an SSC are to be calculated using by applying the relevant income tax rates, or those income tax rates of which are pertinent to the current assessment year. Okay, now then we shall try to discuss another important topic known as residential status of an SSC, and such residential status of the SSC has to be discussed in the context of an individual SSC, then a Hindu undivided family, then partnership firm, company, association of persons or body of individuals, local authority, and so on. And then we shall go on to discuss other important heads of incomes, such as income from salary, house property, business or professional income, then capital gains, then income from other sources, and so on. So I think this is just a little bit we have been able to discuss today, just as a matter of giving introduction to the subject of income tax as such. So this is all from my side today. Thanks to all of you, for attending the lecture session. I am really so happy about this. Please try to maintain the tempo, maintain proper regularity in attending classes, and also try to get the issues clarified within the class session itself. Thank you. This is all from my side today. Thank you so much.